So today we're gonna talk about China and why it's worth investing in China. I want to emphasize it's not an investment advice. I actually did like a presentation competition, Preiswettbewerb actually in German. And yeah, I was just like sharing my thoughts and ideas about why it could be an interesting opportunity. It was actually a year ago, but my thesis is still valid. I will aim to post the video in a moment where I think buying Chinese stocks is again a good, uh, in my opinion, opportunity. So let's get started. This is kind of like the build up. Don't be scared. We're gonna be running through it pretty quickly. So yeah, as you can see, I cashed out a little bit after JD, for example, hit $44. I bought it for 20. Yes, you can see down right here, there was a huge bull run. So China is like that. It goes up and down, a bit more volatile, but yeah, like for a little bit of percentage of your portfolio, it's a good pick in such situations. But now we are JD is at currently 30 round, so because this was in 2024 October, so the situation a bit different, but still these points gonna be valid. So why should we invest? Well, first of all, Robert Kiyosaki also points out in his book that basically there are like four categories when it comes to earning money. You can have a job, you can work for yourself, and in these two times, time is your limited resource. So you put in time to get money, but you can also lead company where others work for you. So it's not only time that's like you're putting in to earn money, but also others are like kind of providing value for you. So that's a good way. But even better way is to invest your money so your money can make money for you, basically. But you need to make smart decisions. So you need to educate yourself. I want to point out that Robert Kiyosaki mainly talks about the real estate market. He is a big player in that one, but I'm just gonna show you why stock market could be a better option. Sorry for like charts are in German. It was a German presentation, but I think you can understand if I clarify it. So basically, this chart is um, it's from 1975, and basically, if we take the S&P 500 at that price and the home price index at that price, we can see that the stock market, the S&P 500, outperformed the real estate market in terms of return. The real estate market returned 4.9% in this last 4 to 6 years, while the SP 500 returned almost 9%. So as you can see, it's almost double the return. Moving on, there are four phases of economic cycle, and in each phase, different sectors perform better. So if you're interested in real estate, you should really look for like immediately after the crash or the like a recession or like a crash of 2008. And after that, real estate prices really slashed. So it was a great time to buy, as you can see. In the green, it's marked here. So this is like expanding, upward trend. Then we have the boom here. Then it's kind of like the top. We have finance like banks and energy like oil outperforming other sectors. We come down here red. So in recession, healthcare, utilities are outperforming other stocks, not by a huge margin, but basically they lose less or maybe even gain. Because these are things that we need all day. Doesn't matter if we're in recession, we will still pay money for that. Then we are entering on bottom point, and then we start to recover. And immobilian, so real estate is a great pick. In this case, or industry or industrial, yeah, like and then we enter green phase where basically IT and communication. So like these more risky return on investments outperform the market. Moving on, this is the model of Kostolany, very famous Hungarian and Austrian investor, and yeah, basically just like selling at the top and buying at the bottom. I know, but it's his famous like model. Um, and here's the book. I actually read it one, and we will have some great quotes at the end. So just to clarify, there's always a boom after a crash, and vice versa. Um, there's always a crash after a boom. So what you want to do is buy when there's a crash, and in case it falls even more down, then you just buy. Uh, like basically you wait until it starts going up, and then you just buy a bit more, and then you should sell when it reaches upward maximum resistance points. So like places that it can be dangerous to test the bottom again. So in China especially, um, China is like a max pain market. It likes to go back to the bottom and then go right away up to the top. Um, and it's a really political market as well. So with that being said, just to clarify how the price of stocks work, if there's bigger demand for the stock, then the price goes up. If it's like an equal amount of people want to sell and buy, then the price stays stable. And when people want to sell it and not many people want to buy it, then the price falls. So another really important indicator is the fear and greed index. You should be greedy when others are fearful. You should be fearful when others are greedy. So when I looked at this chart and I saw that China is like kind of like mines. It was in the extreme fear. And the SP 500 was in extreme greed. So obviously, I was tempted to buy more of the Chinese stocks, not the S&P 500 stocks, because I really respect that indicator. Um, yeah, so in this next slide, you can see how accurate this actually is, because again, on the American market, for example, when we have this extreme fear above around 25, then we can see the lower prices, then we're just gonna shoot up, and it also the prices followed. So upstream greed when everyone wants to buy, they think it's gonna go to the moon. Extreme fear when everyone wants to sell it, they think it just cannot stop falling. But you should be contrarian thinking if you want to make money here. It's my own opinion, not a financial advice. So just make sure you make responsible decisions. And I also want to show this chart from the China top 300 companies compared to the top 500 companies of American market. So at the time of this presentation a year ago, the presentation competition, it was looking like this. So yeah, one might think, why is this the case? We will talk about this. But you can see that there was a decoupling. Like it should not follow each other actually. So the Chinese market and the US market does not need to follow each other, or like not need to go in the same rhythm. They are quite distinctive in some ways. So as you can see from COVID, China just was downward falling. I would call this like a 2008 size recession. But regarding the uh, US market was making new highs. So one was greedy, one was fearful. Yeah. And if you just think about a regression line. So um, in if we go back to the 1,870 years, you can see that basically we can draw a regression line, and if we're above that line, then we are in an overvalued, we could say, price level, which will probably go back and retest or more or less fall below sooner or later this level. And we should buy when we're significantly above, or like we always need to decide based on context, but um, I mean sell when we're above and buy when we're below, in a nutshell. And here is the the writer Daniel Kahneman of this great book. I also read this one. Thinking Fast and Slow. I use it for my thesis as well. Really, really great book. He won the Nobel Prize after writing it as well. So this is a takeaway. And here we can see the dumb and smart money chart back in 2024, early, I think Q late Q1, so like March. Um, dumb money was high. I mean, retail investors um, and hedge funds and institutions, banks were not so heavily invested. We can see that it was 0.77, so 77% of the market participants were not professional investors. It's not a good sign. You want to follow the smart money, at least. That's what I prefer. And famous people were selling back then. Warren Buffett is still selling. I'm not really repurchasing just yet. He's waiting for like big crash. He says like SP 500 crash is 20%. That's nothing. It just happened in April. He expects something much worse to come, which could come in like the next 1 to 5 years. He says at least. Um, so Walmart was also selling. Michael Burry was, on the other hand, investing in China. That's what I like to see. And what else would I like to see is basically smart money flowing into the Chinese market. Back in those days, Chinese companies were repurchasing their stocks. It's like the ultimate insider buy. They know their company best, so if they believe their stock price will go up, that's a good indicator. You should pay. I always pay attention to that. Um, yeah, and now let's just pay extra more attention to the Chinese market and what China has been doing in the last few years. Well, we can see in the last 20 years, it basically doubled its share of global GDP from 8% to almost 19%, while the US and EU was losing market share on the global GDP level, if we look at it that way, um, which is contributing to this huge rise of yearly salary in China, which 20 times in the last 30 years, which is a huge number and it's still low. It's still below US levels by far. You can see it's $17,000 per year, but it was actually just 1,000. So I mean, as an investor, I'm looking for like growth. So in China, there is bigger growth for now than in the US because still right now China is growing around with 5% GDP yearly growth, while US is aiming for around 2 or 3%. So because China is actually not a developed market officially, I mean it's a developing market. So and why were the Chinese market crashing so bad? Well, international investors were losing faith in China. I will show you why. But the confidence, the faith, the trust in the Chinese market was at a 30-year bottom, which is really scary. But I aim to be, to, like faithful when others are scary. Be greedy, when others are fearful. So as we can see, the USA was doing the tariff war back in 2018 and now again, by the way, in 2025, which does have an impact on the markets. And besides, there was the Taiwan conflict. China is threatening to conquer Taiwan sooner or later. They say it's inevitable to happen. So there is always this little risk, but I'm not. But I wouldn't think they would do it just yet. Their market is still not fully stabilized, so I would be surprised if they go for such an aggressive move just now, even though geopolitical tension is rising, but we will see. And there is a small deflation, or at least back then, but now it's still pretty low. There is a growing um, young unemployment rate and the demographic problem of the shrinking population. Actually, until 2030, China's population will grow, but after that it will start to decline. And also, the COVID zero politic was leading to huge restrictions, and people just started saving money. And another reason for that was the real estate crisis. So there was a crisis actually in 2021 around huge Evergrande Evergrande company that was the main real estate building company basically went bankrupt because they were selling prices like pre-selling prices before they were even built, and the China just made some regulations that was like making it harder to pre-sell houses and then to get the materials. So at the end, a lot of houses could not be built that were already sold. So a lot of people just are still waiting for their houses, which is really bad, and they get scared now. So people just don't spend, don't invest. Maybe actually they could invest more in stock market, like as as they lost a bit more faith in the real estate because they like the real estate market in China was booming, and the political party made a like um it was a thoughtful decision to make stricter policies on the real estate market because they saw that it was in a bubble. But we know that something is in a bubble, then it will likely come down. Moving on, is China the new Japan? I don't think so. Why? Well, basically they have a bigger population, almost by 10x, and they have better birth rates still. It's not shrinking yet. And they also have better political connections with the new One Belt, One Road initiative that I will talk about. And the technology, just look at technology. Like AI, they are on the edge. They are leading in AI, we could say. For sure, when it comes to return on investment, they are building AI in a much cheaper way. DeepSeek, Alibaba's Kuwen model, Baidu, robotaxis. We will talk about them in later videos. Xiaomi could somehow make a great EV car that Apple could not. Or just look at Xpeng, which is just trying to release flying cars and robots next year. It's crazy. A lot of great Chinese companies that I really love. Um, JD real estate, really modern, using drones and whatnot. Yeah, so they have a strong international um, trade. And moving on to the new One Belt, One Road initiative that was initiated in 2012. Basically, they help countries to develop, let's say, harbors, ports, but they gave them so much loan that they will basically never be able to pay it back. So it's like a political power move. They are indebted to China, so China has a little bit of impact. They have a word. They can regulate the decisions made by that country connected to these investments. Um, it's that trap, but it's beneficial for the countries. So we could say it's a win-win. And this is how China likes to expand, not by conquering, by force, brutal force, but by looking for win-win trade. Yeah, and they can get this cultural impact of China through this, like BYD coming to Hungary. We can see more of that. And yeah, they are pushing for yuan to be the currency of trades on like the Hong Kong dollar. They want to buy oil in that. So these future plans that will make their plan of becoming a global world leader soon um, able to become a reality. I mean, it's not like 100% thing that will come true, but this is their plan, and they have these 5-year plans as they are not a, yeah, like a communist party with free market. Um, so they have these plans, and they do plan to actually make Chinese, I think, the world language by 2015 or something. 2049 actually, because this is like the 100-year anniversary of China becoming, what we say, like the political, the People Party of China, or how do you say that? Yeah, they became in power. But enough of that. Basically, I want to end this presentation with some quotes from Andre Costolani. In a recession or a crash, um, the stocks must fall. But uh, I mean, so when the stocks falls in a recession, you should, or I aim to. It's not a financial advice, but I aim to purchase stocks that I believe in and they are quality. And usually, the government regulates the situations through injecting liquidity into the markets, reducing interest rates, and this will usually, um, on the long term, helps the market to recover and stocks to reach the old good times. Yeah, but Andre says that we should not run after the time that is gone because the next one will come. So if we were too afraid to purchase with such low prices, then why would we, like, greedy, or why would we have the faith to purchase when the stocks are higher? Like, if we were not brave enough to do it at the bottom, then why do we believe it suddenly when they are up? Actually, the risk chance ratio is worse. So we should wait until the next tram comes. We should not jump on a gone one. Okay, so this one is good. The stock market is like a man walking a dog. The man is the market, steadily going forward, more or less, and the dog is just running back and forth. So mm, the economy can grow in a steady rate, but the market, sorry, I want to clarify, the market might go back. After 2002, huge dot-com bubble crash, Microsoft was performing steadily, was just bringing in higher profits each year for 10 years until 2010, but its stock price was more like a U-turn. So yeah, the dog was running down in that phase, and now it's up, back up. So you know, things like this happen. And also, I want to end with this quote that pain that we might have to endure when we buy a stock and it falls below our purchase price is is the pain that we have to suffer, price we pay, when later the stock will be higher in an ideal case for purchase price. And this was and and to get this reward, we might need to endure this pain. So thank you very much for your attention. I use these resources. I hope I could deliver some value to you. My next video will be about China, more specifically right now. What are my thoughts and strategies and my favorite companies? So this was not a financial advice, but my thoughts. Actually, my presentation a year ago that was leading me to invest in China and was a good decision after all, turned out. And yeah, I hope I could help and have a great day and see you in the next one. Take care. Peace.